Let's talk about it with Doug Flynn from Flynn Zito, who joins us now on the business news and the Fed rate decision. No decision on rates. They didn't move, but what they penciled in, one rate cut, I believe, before the year ends. Does that sound right to you?
It does. I think what they're looking for is a couple of quarters of this type of report, actually. So we have another meeting in July and then one in September. And I do think that if they get a similar report like they did today, then that sets them up to cut in November. I really don't think that they're going to cut before the election. But that is what you need to see to have that consistency there. That's what they're looking for. The one number that I didn't really see was what the inflation rate was on the hot dogs, because I'm curious about that.
You believe they banned Joey Chestnut? You can't ban Joey Chestnut, right?
No, definitely not. But obviously, non-competes are still alive and well, even though in New York State they're trying to ban them. But those things do live on. So we'll see how that goes. But definitely, when it comes to this, the Fed, if they get the news that they're looking for a little bit more consistently, will finally get to the point when they can cut, and then maybe they can start cutting. They just don't want to cut too soon, because if you do, then people start spending a lot more, and then inflation can kick back up, and that is the last thing they want to have happen when they start cutting.
This idea of a 2% target on inflation realistic anymore? Let's bring up the numbers showing inflation cooling at the 3.3% annual rate we talked about. And if you look at it, month by month, so it's 3.1, 3.1, 3.4, 3.3, 3.3. I mean, is that kind of a new normal, or do you think we go back to 2% inflation at some point?
Well, if you think about what happened, we hit 9.1% inflation in June of 22. And then we came all the way down to 3% in like June of 23. So we made a lot of progress. But since last year, that's why they say it's sticky. It's been hovering above 3%. It kind of ticked back up, and it just can't seem to get below that 3% number. Now, I will say the core number today was off a lot. It was below expectations, more than anyone anticipated that it would be over the last month. So the year over year now is getting much lower. It's 3.4% now. A month ago, year over year was 3.6. So you're getting to the point. But the Fed came out and said, in order for the inflation rate to get into the twos, you do need to have a better balance and better job growth numbers. The job growth numbers need to slow down. So they think that the balance is happening. The job market's strong, but it's cooling. So we need that to actually get a little cooler for the number actually to get into the twos. So if that doesn't happen, then we're going to be sitting here around 3%. They're going to have to adjust what they say.
I think people understand it, but it still drives them crazy that you're rooting for job numbers not to be that great. And then you're saying that when you look at what quote unquote core inflation is, it strips out food and energy. And everyone's saying, I need food and I need energy. But it does allow them to compare things year to year and month to month without the volatility. So it does make sense from that point of view. All right, for a moment here before the closing bell on Wall Street, let's talk about Apple. We talked about Apple on the show earlier this week, but now we have a new headline about Apple. It overtakes Microsoft again and jumps up to be the world's most valuable company. So, so much for Apple being kind of out of it. I don't know that it ever was, but people were saying, it was yesterday's news, and now it's the most valuable company in the world again.
Yeah, we spoke about a couple of days ago when NVIDIA had overtaken Apple as the #2 company, and Apple had dipped to #3. And then lo and behold, they did have their big event. They announced their AI initiative, which everybody has been waiting for. And the stock moved about 10% in the last couple of days. And so not only did it catapult above NVIDIA, but now it catapulted just slightly above Microsoft to overtake the number one crown in the world for the most valuable company. But it does show you that AI tilt. They've been lagging there. What they've announced, it looks like people seemingly like the news. And so there it goes. But where it goes from there, they got to continue to execute. And we all expected that and hoped for that from Apple, but it shows you that competition is a good thing. AI can be accretive and be positive if used properly. So we'll see how it actually plays out. But right now they're on the anticipation of that. And it was some welcome news, and that's what sent them over the top.
You know what was interesting? At first, when they announced the AI initiatives that they had, there was some disappointment. Stock went down, but then the next day it went up. And I think people started to realize that it may not have been perfect, may not have been everything you wanted, but there's been really, if you think about it, no reason, not a good reason at least, to upgrade your phone the last few years. You were fine. You had a 12, 13, 14, whatever it was. But now maybe this is a reason for people to start upgrading phones again.
I think a lot of that's going to come into the new operating system. Even if you have a slightly older phone, you're still going to get the updated operating system.
On the operating, but I think for the best AI, you need a
Yes.
15 Pro or more, I believe.
You do, and you're going to obviously everything needs more and more power and more access. So the older phones get harder to operate all the new updates, and eventually they can't keep up with them. So obviously it's speed and accuracy, and yes. So then people had a sense to look at it, and so now they're thinking maybe it's a little better than they initially thought.
All right, Doug's always upgrading everything, cars every week, and cars. He'll have all the phones. Thank you, Doug, as always. Doug Flynn on that.